Hello everyone, welcome back to Just Invest Today. And in today's video, we're talking about the 13F filings that got released last week. And predominantly in this video, we're going to talk about Michael Burry's and David Tepper's portfolio. They changed a lot, especially when it comes to China. We need to know what is the real reason why they're invested so heavily into China, because we do know there is some risk according to Wall Street. So we're going to name at least 4 reasons why they are so heavily invested into China, and we're going to look at the changes that they made in their 13F. So let's get into the video right now, guys. Like and subscribe to this channel. So before we get into the changes that Michael Burry made, look at his portfolio. He reduced Alibaba by 25%. Guys, that's a big chunk. I think he's up around like 50 to 60% on his position already. So this is actually really good gains for him. So him selling this is not a surprise because he's a really fast trader. Like, he just gets into these positions and gets out. He sees a prime opportunity. So honestly, him kind of getting out 25% makes sense. Him holding Baidu makes sense as well, and not selling it because he still thinks it's undervalued. It hasn't taken that big rise like these other companies like Alibaba. It's already done like 50-60% from its lows. So that makes sense how he's keeping his Baidu position. And JD.com made the huge run. I was buying this around 29 as well, and I had a huge profit around 40 to 45% already. And I sold all of my JD.com, and I still have a JD.com position in my other account, which is kind of down because I was buying JD.com a while ago. So him selling 40% here makes sense as well, because JD.com has gone on a big run since he's been buying these shares. Like, the low was 29, it's already selling at like $42. Him selling these 2 positions actually kind of makes sense in his China holdings. But guys, China still is a huge part of Michael Burry's portfolio, over 50%, even with these sell downs. So I expect him maybe to sell down more, but there's still so many reasons to hold these stocks. And I'm going to come to that after we talk about David Tepper. David Tepper is really bullish on China. Remember, he came out and said that buy everything China. I made a video on that as well. He sees amazing things going on in the economy right now, and he's just super bullish. So he increased his position by 18%, 50% of his portfolio, reduces Amazon. So this is really telling. He's reducing his positions in the Mag 7s, like Meta down 21%, Alphabet he didn't really sell, but it says 0% for some reason. And he invested more in his China positions. His JD.com is up 43%, man. So you see what he's doing. Baidu up 7%. So you see the transition that he's making. He's selling the Mag 7 because we know the Mag 7 is super expensive. It's the stocks that have been basically running the market for the last 2 to 3 years. That section of the market's getting into that overvalued like kind of area. So he's selling that and buying in all into China. And it just makes sense because even Charlie Munger said that China has the same kind of dominant, strong companies, but they're just at cheaper valuations. So I agree with Charlie when he said that. So that's why I was so bullish on China. That's why I still see China as an amazing market, especially the direction that they're going in right now. If you've been living under a rock, we understand that the Mag 7 has been driving all the market returns in the S&P 500. And that's why in the last 2 years, the S&P 500 been going up 20%, 20%. So do you think that can realistically happen again for 3 years in a row? Probably not. The chances are not likely. So what are you supposed to do with your money, especially when you have opportunities like China and their market is selling at lows? We still have Baba compared to its history at lows, Tencent compared to its history. We have all of these companies like JD.com compared to its history back in 2021 when it took that huge tech market dip. They're seeing an opportunity of a reversal from that. Let's get into the main reasons why I think Michael Burry and David Tepper are buying into China. So the first reasons why people like David Tepper, Michael Burry are buying into China is because the low multiples compared to the Mag 7. We understand that Baba, Tencent, PDD, JD.com, like these are like cornerstone companies, and compared to the companies in the US, these companies are trading out far lower multiples, forward multiples, whatever you have that. This is one of the reasons why they can confidently get into these markets, because of the cheap prices. The second reason why Michael Burry and David Tepper are getting into these companies is because they see the government actually changing their stance on the whole kind of tech crackdown. Like Xi Jinping is doing everything in his power to kind of boost the economy. He wants a 4 to 5% GDP growth in the economy. You see the government doing boosts and stimulus for the residential market. We see them doing boosts and stimulus for spending. They're trying to get pension funds to invest in the stock market. You see Xi Jinping holding meetings with all the big tech firms. Why would he do that if he's against the CEOs of these companies? They don't want them to get rich, blah, blah, blah. He really wants the economy to grow because he wants to compete with the US and with Europe and all these other countries. So they're going for the #1 spot. Remember, they're still the #2 economy. The economy is about to grow 4 to 5%. So there's a huge backing for China to do good. The third reason why they're investing in these Chinese companies, because you got to think about it. If I just said that the government is doing all this stimulus, what is going to happen with all of these companies? We're going to see revenue growth go up. We're going to see profitability go up because they want people to spend more money in the economy. So that's all extreme bullish for these companies. We're going to see CEOs actually coming out and really kind of helping these companies spending more on AI cloud, because that's the way the government wants to invest more in AI cloud in the chip market. We're seeing a positive telling the CEOs to grow, which is what these companies are going to want to do. The last thing I really kind of talked about is the expensive US market. These hedge funds need another area to invest in because everyone is super worried about the economy and super worried about how expensive the market is. The S&P is still at all-time highs, and we know this can't go on forever because it's trading at multiples that we haven't seen in like a long time, or kind of close to these high multiples, while China is selling at low multiples. So it just makes sense that you gotta kind of rotate out of that in case of a market crash. So what are your thoughts on investing in China, guys? Like this video and subscribe to my channel. Peace.